Hello, everyone, and welcome. Thank you for joining us during the Lytham Partner Spring 2022 Investor Conference. My name is Robert Breza, Vice President of Lytham Partners. During this presentation, we welcome in CEO David Johnson and CFO Barry Lappin from Imperial Helium, ticker symbol IHC on the TSXV and IMPHF, on the OTCQB. Today, I've asked the company to briefly run through this slide presentation, and then we'll engage in a fireside chat, like a Q&A session. Before we begin, for those not familiar with Lytham Partners, it's one of the country's leading investor relations firm with more than 2 decades of corporate access experience. We've built one of the industry's most diverse and effective platforms for connecting small cap companies with high quality investors, creating a framework for best practices. Before we begin, one final item. I want to remind everyone that Imperial Helium is available for one-on-one meetings later this week. If you've not already signed up, please send me an email at Breza, B-R-E-Z-A, @lythampartners.com or visit lythampartners.com /virtual and click on the one-on-one meeting request. With that said, let me turn the presentation over to David Johnson, CEO of Imperial Helium. Thank you.
Great. It's a great pleasure to be here. Thank you so much. I'd like to put up the deck now. Great. Imperial Helium. Forward-looking statement. Helium is absolutely critical to almost every step of life as we know it. It is usually important around the properties that helium has. So helium is inert, so it doesn't react with anything. So it is useful in manufacturing a number of things, but most importantly, semiconductors. So computer chips, fiber optic cables, can't have life without them, can't build them without helium. Absolutely critical. Another thing that helium is absolutely critical for is cooling, because it has this huge ability to take up heat and then to dispel it. So it's really important for everything that uses electromagnets, and that would be MRI machines. Can't run an MRI machine without electromagnets, can't run an MRI machine without helium. So it's absolutely critical. And aerospace, rockets, you have to have helium to flush the tanks and push the gases out that are burned in the rocket engines. So it's absolutely pivotal. Can't do it without it. It is also one of the few gases that can lift us off the Earth without propulsion. So lifting is hugely important, and it is the smallest molecule. So we use it for testing leaks. When you look at the market for helium, there's a lot changing right now in the market, but one of the big drivers for the demand has been that in 2018, the United States, through the Bureau of Land Management, which used to own large volumes of helium, decided to get out of selling helium on a commercial basis. And as a result of that, they removed about 2.1 billion cubic feet from the market. And if you look at the graph, that's that orange wedge tapering off. Now, Russia was going to get into the market and bring 2.1 billion cubic feet of helium into the market space. But then we've had the crisis with the Ukraine. And as a result, that helium is not coming onto the market. So that helium, what we see now is that helium's not coming on and not coming on for a couple of years. So that puts pressure on supply into the global market. Now, another one of the big suppliers in the global market was Algeria. Algeria, though, with the shortage of gas in Europe because of the Ukraine, the war in the Ukraine, is diverting their gas now through pipelines into Europe. So the helium that would have come off in the LNG making process is not coming out of Algeria. So we have 2 places where reduction of supply is impacting the global market. Though both of those things are huge. But on the demand side, what we also see is that the US is centralizing a lot of the manufacturing, particularly chip manufacturing, through the CHIPS program, $56 billion set aside for manufacturing or incentivizing the manufacture of chips in the United States. So that is pushing the demand side. So we have drivers on the demand side, and we've got constraints on the supply side, and that is clearly driving price. So historically, price in the United States was controlled through the BLM. That is, there were public auctions for helium. And you can see that through 1999 up to around 2013, the price is pretty flat. And that's because there's public auctions. In 2013, the US government said, it's critical, we're going to keep aside what you have left in the BLM for government uses, and we're going to stop selling commercially when we reach a threshold event. That threshold event happened in 2018, 2019, when they stopped their commercial sales of helium, and price shot up. Now, what's happened since 2018, 2019 is we've had a series of shortages and allocations as the market reshapes itself, and now we've had the war in the Ukraine and the cutoff of the supplies of helium to the world from Russia. Now, the other thing that's important about helium supply and demand is that helium can't be transported and stored efficiently. That is, it's the last thing to become a liquid, and it takes a lot of energy to make it a liquid and then to keep it a liquid. It gets transported in essentially tubed containers called ISO containers, and they have a 7-week shelf life before they begin to vent the helium or vent the product. And helium is a very expensive product, as you can see, at $375 per 1,000 cubic feet. So it's a high value commodity. Compare that to natural gas at $5 for 1,000 cubic feet, a lot more valuable. So you can see that it's transported in these ISO containers, and then when it gets to its destination, it essentially is an on-demand product. It gets gasified and put into the market almost immediately. So it's not like there's a big storage place anywhere or large cylinders that store helium. They don't exist. So the global markets become isolated by their ability to transport helium efficiently. It's much like LNG in that regard. In Imperial Helium, the way we've moved forward is we've created a company that went out to look for helium where it's already been found and begin to find those assets. That is, these are wells that were drilled that identified that there was helium, but were shut in because helium was really a byproduct and not part of the equation and not part of the financials driver on those wells. So they've been set aside and the helium's still there. So we've gone back looking for those opportunities. The other thing we've done in order to create capital efficiency is that we've partnered with both companies that manufacture helium separation equipment, that is to build a helium refining unit, and companies that market helium. That's Uniper, that is the distribution of helium. And what this does is it allows us to identify an opportunity and move it through to production and get it into the marketplace as quickly as possible. Now, we expect to be able to bring helium to market within 2 years of IPO. That's currently what our target is, and we're running hard to make that happen. As part of that, what we've done is we've identified an asset that we've drilled and tested now that has 10 to 15 million cubic feet of raw gas deliverability, which will translate into roughly 12 million to 16 million cubic feet of helium per year. So when we look at our capitalization table, where are we? Share price trading around 25 cents right now. We have about 88 million in basic shares out there. We have roughly 138 million shares fully diluted. Market capitalization fully diluted at $34.5 million, and about $13 million in dilutive proceeds that could be attributed to those dilutive shares. When we look at our peer group across the market, one of the ways that I would distinguish Imperial Helium is that really we're in the exploitation phase. That is, we've identified that we can deliver from our wells 10 to 15 million cubic feet a year, or as the chart is showing, 5 to 8 million cubic feet per day of raw gas per well. So we're ready to bring a plant on stream, and that's really where we're at. A lot of the other companies are really sort of more in the exploration mode. They have a lot of land, they've drilled a well, they've gotten some encouraging results, but they're not really ready to bring it on stream yet. They haven't done the drilling or proven up the production so that they're ready to move on stream. So when we look at the company overall, how do the economics stack out? Well, really, we're looking to do our economics at around $500 US per 1,000 cubic feet of helium. What we have is a finding and development cost of roughly $110 per 1,000 cubic feet. So that turns into a recycle ratio of about 3.5, and it gives us an internal rate of return of around 83%. So it's really an attractive opportunity. How did we do it? Well, one of the advantages in the Canadian market is that the oil and gas, the mineral rights are actually owned by the Crown. And because they're owned by the Crown, there are large databases, which are public databases that can be mined. And that's what we've done. We went out and we looked at the public database for all the wells in the Western Canadian Sedimentary Basin, 650,000 wells in this map sheet. Out of that 650,000 wells, 200,000 of them, a full third, have gas tests. So we know where the helium is. Then we went out and looked at how many of those wells actually have more than 0.5% of helium, roughly an economic threshold, about 2,000 of them. Out of those 2,000 wells, we identified an asset that we could secure quickly and move it forward. That's the Steveville opportunity that's shown on the map as the gold star. We acquired 95 square miles in a lease area over a large basement structure. And then we went in and we drilled on that structure, offsetting a well that had already drilled it and produced significant amounts of helium. And what we were able to do was prove up 2 zones. A blowout zone, which is where the original blowout came from in the 1940 well, which is how we found the asset, is through the reports of the blowout. And from the subsalt zone, a zone that is just below it. And these 2 zones together have a deliverability of approximately 10 to 15 million cubic feet a day. So this is really our first field that we will bring on stream. So the Steveville asset, as I said in more detail, basically we drilled 3 wells. The first well defined the closure. The second well, we had the blowout zone, which has 0.43% helium, and we didn't test the subsalt zone. The next well we drilled, which was Steveville 3, 43% helium in the blowout zone, 0.51% helium, 20% more in the subsalt zone. So we have these 2 zones. And what we're doing now is we're going back to test that subsalt zone in Steveville 2. What this modeling shows us is that we have a full 3 years of solid production at 10 to 15 million cubic feet a day before we go into decline. Now, that doesn't mean that's where the production ends. The decline is approximately 15%, which gives us a full life of the field at somewhere between 10 to 15 years overall. So we have a significant resource. We've proven up the deliverability, and the next step for us is to build a plant and get on stream. This is what the Steveville structure looks like overall. Here's the structure entire. The big red dot is Steveville 2. That is the producing well. That is will be one of our producing wells. And Steveville 3 is the well that we're just finishing testing now over here. And it will be our second producer. So we're looking at a 2-well field development from these 2 wells, the Steveville 2 and the Steveville 3, of 5 to 8 million cubic foot per well per day, totaling 10 to 15 million cubic feet of raw gas. Now, that's just the Steveville structure. On the block itself, there are other structures which are attractive to us, and we're looking at going out and drilling those as well, which will add on potential. But further to this, we've identified a play concept in the area. So there's running room around us to go and buy more lands and move forward with further acquisitions. And we're looking to do that too. Now, overall, as I mentioned, we built out a set of strategic partnerships. The company began as a partnership between Cronin Capital and Petrel Robertson. Petrel Robertson lending their technical expertise and Cronin Capital bringing their financial expertise. And then, as I mentioned before, what we did was we value chain. To do that, we partnered with Onto Solutions and Uniper. Onto Solutions is a fabricator of helium separation equipment. Uniper is a marketing and transportation company of industrial gases. On the road to commercialization, this is our track record. So we IPO'd in May of 2021. We finished securing our lands in June of 2021. We immediately commenced drilling on June of 28th of 2021. By September, we'd completed the drilling and production test and proved up the initial parts of the opportunity. Then in December, we proceeded again with drilling what would become our second production well, and we're just finishing the testing on that now. That's his first quarter 2022, where we finished testing and the positive results on the well. So that really establishes our deliverability. Next steps for us are to move to an independent resource assessment. So we get a resource that is actually certifiable. And then what we've done with our partners is we're building a prototype plant. This is not the plant that will actually produce the helium. This is the plant that you build first so that you perfect the design of the plant before you go build the full-scale plant. It also establishes that we're able to produce 5,9 helium. That's 99.999% pure helium. So why do that? Well, the reason that we're doing that is that 99.999% pure helium is what most of the helium uses are. It commands a premium in the marketplace so that we get more value for it. It's the same thing as integrating along the value chain. We're essentially capturing more of that margin so we could return that value to the shareholders. We're looking at completing our facilities construction in 2023 and really move to first commercialization and cash flow in 2023. We are committed to being a green company. I want to make it absolutely clear that our gas that we're producing from our field is dominantly nitrogen. It's about 90% nitrogen. There's about 3.5% methane. We'll use that methane as fuel gas for the plant. There's about 8% that's CO2. And that CO2 will be re-injected back into the ground, so it's going to be completely sequestered. So our environmental footprint is extremely low from a CO2, from a greenhouse gas emissions. We're a well-structured company, and we look forward to doing business with all likewise partners. So we're looking at having a plant in production by essentially in 2023. We have a sizable land base. We're a vertically integrated company. We have strategic alliances in place. We have a proprietary database that we've built for chasing other helium opportunities, and we've proven that our ability to do that with the Steveville opportunity. And we have a strongly aligned board and management. So this is Imperial Helium, and happy to answer any questions.
That's great. Thank you, David. Just before we dig into one quick question here, it came across. When you're thinking about that, back to the slide around commercialization, are there any regulatory approvals that need to overcome?
No, there really aren't any huge regulatory hurdles. And partly that's because helium's inert, it doesn't react with anything. Another portion of it is that helium is relatively new as a commodity in the market. So we're in that space where the regulations are just beginning to be written. It has been identified as a critical resource in Canada. It has historically been seen as a critical resource in the United States. It differs a little from natural gas and oil in that it doesn't have the same requirements as what we call in Canada an NI 5101, but these are the SEC requirements around how you characterize reserve and resource and et cetera. So there are numbers floating out there with helium companies where they're talking about their resource like it's reserve, and it's not necessarily a reserve because it doesn't. Those requirements aren't established yet, but they are. When we talk about them, when I talk about a resource, I use it in an NI 5101 or SEC compliant manner.
Sure, absolutely. The next question, appropriately for Barry, can you walk me through the balance sheet and the burn rate?
Sure. We are currently, just with one thing that we didn't mention on the slide about capitalization, it's a fairly clean balance sheet. There is no debt in the company right now. And we noted on that slide as well that our cash as of March 30th is about $1.6 billion. So clean and healthy balance sheet. The monthly burn for us, roughly $200,000 a month. That includes all of our operational expenses right now.
Great. Another question for David. As you look at, I'm going to paraphrase here, as you think about the Russian oil or Russian helium not coming online, and the ability to overtake maybe a larger percentage or portion of that wallet, how are you thinking about share gains as it relates to the global market with all the inputs and outputs, I guess? Thanks.
Right. So what we're seeing is the demand for helium, particularly from North American helium, is increasing. We're receiving calls almost biweekly at this point, where people approaching us wanting to secure contracts on our helium, and we're not even in production yet. So there is a strong interest out there in the helium, and part of this has to do with the constraints that are faced by Russia. A lot of the Russian supply was already earmarked to go to China. The bigger part, I think, of the problem is that the Amber plant was, I believe, constructed by Air Products, and Air Products was part of their downstream partner, and the sanctions wouldn't allow Air Products to still be involved. So there are challenges there for sure that they'll have to come over. But what we're seeing on this end is strengthening of demand in the North American market for sure. And we've seen that as well in terms of local manufacturers, chip manufacturers looking for supply here, as well as Asian manufacturers, other countries in the Asian nations that are looking for supply.
It's interesting when you look at that overall demand and the new applications continuing to evolve, especially as more electronics, high-tech componentry, et cetera, sensors. I mean, the underpinning trend of the need for sensors, et cetera, cars, it seems to have plenty of room to run. When you look at your vertical strategy, one big takeaway, at least from this take I'm taking away, is the vertical strategy really does allow you to really distance yourself, yet more or less control your own destiny. Is that a fair characterization relative to a country like Russia, which depends on partners, or other people that depending on other partners, where your strategy seems to be well in place?
Yeah, and that really was part of the strategy to begin with, is that we realized that helium plants are scalable to the size of development that we have to offer. So we went out looking for how to accomplish this, and in the process, we discovered that there were partnerships to be made with people that are interested in partnering with us on developing plants of scale to the different opportunities that we have in front of us. So helium separation is actually not a tremendously complex business. It's helium's inert, so its separation is physical. So it's basically a two-stage filtration process to get it to a refined product.
Very interesting. One other question, as you're looking about the unfound wells, when you're looking at, is there, I guess, person is trying to figure out the exploratory side, I guess, going forward.
Yeah.
Maybe you can just talk a little bit about your expansion as you think about exploring going forward.
Sure. So we have all these wells. We have this large database.
Yes.
And we've looked through that database where there are gas tests. And what drove us to attracted us to Steveville was that it was the gas. They had this large blowout, but there was no explosion with the blowout. And the no explosion with the blowout was because the gas was 90% nitrogen, and only 3.5% methane and a little bit of CO2 and the rest, and then it had this significant portion of helium. So we have gone and looked at at other opportunities like that and have identified them and are chasing other opportunities that have gas that wouldn't burn, or that has higher concentrations of helium with methane in conventional traps. Those exist. And then of course there's all the geologic pieces of the play that you can use to develop the play itself and capture more lands and things that look the same. And I'm a geologist. That's part of my history and what I've done as a living. And so we're chasing other opportunities as well. Steveville is really just the starter.
Perfect. Well, David, thank you very much for your time today. We greatly appreciate it. To anyone out there that has not already signed up for a one-on-one, again, please send me an email at Breza, Breza at lythampartners.com, or again, visit lythampartners.com/virtual and click on the one-on-one meeting request button. With that, we hope you all have a great conference. Thank you.
Thank you.
Thank you.